Good morning. Running a little bit late here. Give me a second. Had a bunch of errands I had to catch up on, but I am on. Uh, since I get up this morning, I've been so busy doing things I have not even looked at the market. So, not that I expect much to happen. The Fed is speaking Wednesday. Keep that in mind, okay? I think the market is going to be weak. I did exchange text back and forth with the big guy over the weekend, and we agree. I think the market is going to be on pins and needle until Wednesday, 2 p.m. ish. Um, it's not. It's more of a buyer strike and fear combination. That's what we have so far, um, and I think we will have continued weakness into Wednesday afternoon. So it's one of those things where I wouldn't be chasing dip buying a whole lot unless I see something unreasonable, super unreasonable in the next 2 days or so. But my advice, well, my the big guy advice is stay nimble, buy small, and not chasing anything. Okay, so that's his take. That's his take on what's going on with the market. And I got the Nasdaq open up right here. I drew a Fibonacci retracement. Okay, let me go there. Nothing changed over the weekend. Okay, so unless anyone want to ask anything specific on any one stock, I'm just gonna speak in general as far as the market sentiment, right? So let's not get boxed down on, oh my god, this stock is down. Everything is down for the most part. Okay, so but let's zoom in on this. Is a 3-year look, right? This is the pandemic low right here. Okay, we are still double over the pandemic low. Okay, so keep that in perspective. Well, not quite. We have given back more. We're no longer double from the pandemic low. Okay, so let's take a look. It was one of the ugliest month we had in a long time. When is the last time you see 4 weekly red candle? This is one of the worst month that we had. Okay, one of the worst. Just look, even the pandemic, the crash of the pandemic was worse, no doubt. The velocity is much worse during the pandemic, but you got to understand it's a pandemic. We were facing unprecedented fear, worldwide lockdown, shutdown. Okay, so but what a snapback. Okay, so you're talking about February 17th, and by May, June, not even 4 months later, we were up and running above. Okay, so it was a 3.5 months of pain, and then we're up and running. This is much worse. I talk about this endlessly the last 2 months, right? This right here is so much worse than the pandemic low, because like I said, it hit the low within a month, from early February, mid-February to the mid-March. Massive velocity move, but then 2 months later, it was almost even Steven. So that felt, in hindsight, I'm sure everybody in the chat room, in hindsight, it didn't feel bad. It was so quick. 3.5 months, boom, poof. This last 5 months, since early November, mid-November, has been much worse. Okay, it feels much worse when you have 5 months of 25% decline. Much worse. Much worse. All right. So, I forgot to talk. Where can it go? Okay. What is the worst case scenario for the Nasdaq? I forgot to talk about that. All right. So right here, 12,204, 5% lower. Okay, so if you ask the big guy, I drew this in, and then I asked him over the weekend. I said, do you think it's reasonable to say that a potential near-term bottom this week is 12,200? And he said yes. He said if this does not bounce today over a critical support, he said there is no reason to think that it would not go 5% lower to the ref low back in March over a year ago. Okay, so we would completely annihilate. We already wiped out a year. The last time that we were here was early April. Okay, early April. So we already wiped out 12 months of gain completely. Anyone that invests in the stock market over the last 12 months and buy and hold has at best broke even, at best. Okay, otherwise if you bought average in cost average or the dollar cost average into your investment with your 401k, you lost. You can be down 10, 15, 20%, if not even more. So right now 12,204, so keep that number in mind. If this fail, oh boy, okay, you don't want to think what can happen when that fail. You don't want to see sub 11,000. Okay, so I'm not calling for that, but I think 12,200, 12,204 is a very reasonable near-term low. TLT, that's the problem right here. This is a major cause of this problem. Since I launched this chat 3 months ago, I talk about TLT up here, right? I talk about you gotta watch TLT. You gotta watch TLT. Sure, occasionally the market not correlate on a daily basis. Sometimes it doesn't. But if you look at the long-term trend over the last, look, okay, just look at the NASDAQ, the QQQ. If you go to QQQ, okay, this is the TLT 1-year chart. Look, it hit the all-time high in December. Okay, all-time high in December. You want to see what the Q did? All-time high right here, November. All right, so when TLT is all-time high, what does that mean? That means rate is at the lowest, okay? Low rate, good for NASDAQ and the stock market. High rate, bad, okay? So yeah, it might not move completely 100% in sync, but what I mentioned 3-4 months ago when I started this chat is still valid completely. So until TLT find a way, or the Fed, okay, the TLT is anticipating what the Fed is doing. All right, the big guy and I agree that unless, what is a catalyst that the market want to see from the Fed? We know the Fed is going to raise. We know the Fed likely will go 0.5 point. Okay, what the market needs, not that the market will get it, but both the big guy and I agree as we text back and forth all weekend, is that the Fed need to stop hammering the fact that they don't give a damn about the economy and they are here to stop inflation. Inflation data is a lagging indicator. We have a significant slowdown in the economy, and if the Fed does not recognize that there is a significant slowdown and the high market inflation is in, and still talk about, oh, we are behind the curve, we need to keep raising, 75 basis point is still on the table for the next meeting. If that is the kind of nonsense Powell and his cohorts spout Wednesday afternoon, we will go lower for sure. The market need to see that the Fed is in tune with what is going on, need to understand the reality, okay? Ignoring reality and the market will bake in a certainty of a recession. You don't want that. You don't want the Fed to come up there and still be hawkish and talk as if like, oh, the stock market has just crashed 25%, but that's not our goal. Our goal is to fight inflation. All right, so that's my take on what is going on. Look like the pre-market is stabilizing. Okay, I mean it's not a bad or good thing. Okay, it's not. It was ugly. Okay, so be careful if the S&P 500 give. Okay, let's do a Fibonacci here. 404. Okay, let's do that. Add drawing, fib retracement, all the way to the top. Well. It already broken all the fib. Okay, basically I did that. I knew, but I just want to show you that, yeah, we will see a complete retracement down here to 404. Okay, that's very doable. That's not out of the realm of possibility. If the Nasdaq tank another 5%, if Nasdaq go down to 12,204, what would make you think that the S&P 500 is not going to go down to 404, right? It's only 3% away. Only 3% away. So same thing here, okay? What I don't like about the pundit on CNBC is one of the reasons why you don't hear pundit experts talk about a full-blown bear market. Because why? Because the S&P 500 and the Dow Jones has not declined 20%. To me, technically, they are correct, but also technically they are incorrect. Because why? We are living in a technology-driven service economy, more so than a manufacturing, agricultural economy. So when the economy is dominated by technology and the Nasdaq crashed 25%, yeah, I hate to say it, but it doesn't matter if the Dow Jones have 30 company. Okay, it's not representative of the entire economy. It's not even balanced. Some of the company in the Dow Jones make no sense. I'm sure we can sit here and pick apart all 30 stock and say why is 3 or 4 of these companies in the Dow Jones. Okay, so the S&P 500 is more balanced as far as banks, tech, industrial, consumer staple, blah, 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 all of that. So I get it. But to me, when we have such a heavily dependent economy on technology, I don't care if the S&P 500 is only down 17% or the Dow Jones is only down 16%. It's a bear market, okay, to me. But that's my take on why I have been talking about a bear market for the past 2 months or longer, while many experts on TV is just starting to talk about a bear market, because for them we're not there yet. Okay, so let's do that. So what report earnings today? Is there anything to report earning? Gilead? Is there Gilead? No. Let's take a look at drug. Gilead, what an ugly candle. My God. Okay, my God. It was doing good and then boom. As I mentioned, I will be writing puts. Where would I write my puts? 58. Definitely down here. Okay, I'm not gonna write any puts higher. But if Gilead dumped today, for whatever reason, I will write a put down here, 58, 57 and a half. That's where the big guy is doing it, 57.5. Pfizer, let's take a look. Pfizer, Pfizer is doing okay. Okay, as ugly as Pfizer was, it's holding, it's hanging around here, but look like it's gonna dump. Pfizer look like it's gonna dump to the down here, so it's a no touch. My put expire Friday. I didn't do anything. Okay, I figure Monday, Tuesday, because I already have a hunch that we're gonna have a bad Monday and Tuesday all the way through Wednesday. So I'm just like, I'm not gonna write any puts on the position that I have that expire worthless. I want to see what happened. So Pfizer could be ugly, could be down here. Okay. How about AbbVie? AbbVie 146. That's all right. AbbVie is okay. Okay. I'm not adding anything. Okay. Um, look like it's hanging around the 100 MA. If it come down here, 200, who knows? If it revisit the 50, the fifth, I might dip down 140-ish. Now, Amgen, what an ugly candle. Look at that. Okay, look at this thing. Jesus. But it bounced. If it settled down to the 100 MA, I would buy Amgen. Okay, a lot of froth blown up down here. So yeah, give it a couple days. You know what the big guys say on a big gap like this? Give it 3 days. No need to do anything. Volume was pretty heavy. Okay, it was ugly. Eli Lilly, the one that have a good catalyst. All right, they have that diet drug that pop. Well, guess what? Didn't hold. Where would I buy Eli Lilly? Down here, 50 MA. Okay, so if you're looking to nibble on Eli Lilly of the diet drug, down here. So look at this thing. This is one ugly 7-day candle. One green. Now you probably say, "Oh, I missed it. I missed the pop." Well, we nobody can foresee this good news, right? But no. Down here, okay, down here. At the minimum, close the gap at 287. Set an alert down there to see when they hit the gap fill if it's gonna hold. But for now, no touch. BIIB. Yeah, it's all right. It's a no ad for me. Okay, I'm fine with the few share I bought. That's fine. Stay down there. All right. So SMH, ugly. Oh my God. No, I have been out of SMH and I'm not getting into SMH. I'm not buying any chips. I don't care how cheap they are. Qualcomm. As I mentioned last Friday, if you want to be brave and nibble at 139 on a 20 MA, you can. Okay. But for me, 138 gap fill. I think it will visit that gap fill before Wednesday. So why buy at 140 when you can buy $2 lower? Give me a second here. I'm just texting my big bro. What am I doing? Okay. All right. Morning, Jesse. Let's see what Bitcoin's doing. Bitcoin. No. If you are, yeah, down here, we are waiting. The big guy and I am waiting down here, 37. He has his order in 37.5. He's moving his order up slowly. I'm leaving my order at 37, 36, 35. Okay, I'm not moving. I'm not moving. The big guy is more adventurous. He's waiting for a wick down to grab some, but no, not me. How about the other defensive sector that is not defensive? uh, when defensive and not defensive is ugly, right? McDonald's, what would I do? Nothing. Where would I buy it? I still the same. Okay, nothing has changed over the weekend. Okay, so once again, the bottom of the chart is cut off. Goodness gracious. Nobody said anything this whole time. I guess from now on I need to double check this because I don't adjust my chart. So I'm not sure why Thinkorswim readjust my chart every day. Like the last 2 days. It's just like I just open and close. I don't resize anything. So annoying. So annoying. What the? Why are you doing that? Can you just save the setting and not do something dumb? Market will open in a few minutes and we will see. All right, let me move this up. There you go. That is about as good as I can do with the chart. Hopefully it will remember the setting, but I doubt it. That's 2 days in a row where Thinkorswim decide to not remember the setting. Regardless, JL, you didn't miss much, okay? There's nothing that I said in the last 25 minutes that is any different than what I said on Saturday. The only thing that's different than that I said today is that I think the market will stay weak going into Wednesday afternoon because we had the Fed. And the Fed need to stop being so hawkish for the market to have any kind of relief rally. If the Fed continue to have a hawkish hell bent on raising rate much faster, much higher, it's not going to be a good thing. Okay. So yeah, we have MLM earning. MLM needs to hold here. Okay, this is the line. Earning is tomorrow, so no touch, no ad, do nothing. Airbnb, I don't have any. I'm out. I got stopped out. Where? I got stopped out at 156 on sometime last week. Yeah, not much I can do. I'm staying out. How about Amazon? Oh, forgot to talk about Amazon. Amazon, 2402. Okay, that's the spot. That has not changed. The big guy, 2402. We're not touching it. I'm not adding more until I see the white of the eyes of Amazon eyes down there. But the big guy was right. He's when on Friday. He's like, give it 3 days. What's the rush? Okay, what's the rush? It will cool off. It will hit channel low, and then it will bounce. Maybe. he's confident. He's buying. Okay, he have an order down here at 2402. But he's not buying before 2402. How about Pepsi? Oops, that's not Pepsi. Pepsi. What an ugly candle. I talk about this, okay? I talk about this. I'm just like, when the defensive sectors start to act like this as well, we are closer to the bottom than the top, okay? Because defensive sector in the beginning of a bear market get the flow, get the money rotation into the defensive sector, but at the midpoint of a bear market, usually even the defensive sectors start to sell off because at that point, even the people that run into the defensive sector, they got too scared and they just want to go into cash. Okay, so we are at that point. All right, so even defensive sector are getting the scare. See, this is a thing that the big guy and I talk about. Okay, all the inflation fear that we heard 2 months ago when oil was 120, right? We had some people even talk about oil 200. Well, guess what? Guess what? It's not coming through. So the Fed was behind the curve in raising rate, and the Fed is behind the curve in inflation fear. Okay, oil has retreated no matter what is going on with Ukraine. No matter what. Okay, oil and gas, energy. So if the Fed is still whining about high inflation, he must stop inflation. You know what will stop inflation? I talked about this before. A recession. Every runaway inflation has been stopped dead by a recession. So yeah, if the Fed may not be saying it. Okay, the Fed may still be yapping about, you know, stopping inflation is like cheating death. Okay, it's a normal economic cycle. We can have a bad recession, we can have a small recession, we can have a light recession, but a recession is a must in every economy. All right, so I despise the way the Fed trying to manage a recession. The longer we pump the economy, the tougher the recession. Okay, so it's like Thanos saying it's inevitable. Okay, inevitable. I can't even say that word, too hard. So do I watch Berkshire meeting? Not really. You know, I Buffett is Buffett. Nothing that he say or do will change anything. So me no care. Me no care. So the market is open. Real quickly, Amazon down, Google is down, Tesla down, gold down. Oh, let's take a look at gold. Okay, this is a perfect example of a bear market. A full-blown bear market is when everything go down. I talked about this already a few times. When there is no place to hide, commodity, gold, energy, crypto, consumer staple, tech, everything. There is no escaping any sector. What's up today? BTC up a little bit, Costco up a little bit, Facebook up a little bit, Qualcomm up a little bit, but trust me, they all will turn red. Okay, they all will turn red. It's whatever up. Anyone that is buying into the market here in the first 15 minutes are going to likely get their head chopped off. Okay, it's the buying will dry up, and it's gonna be, yeah. The big guy and I have decided over the weekend that we are going to be very stingy with our cash until Wednesday. It has to be some incredible bargain, but until the Fed yap at 2 o'clock Wednesday, we are not going to do anything. And the bigger the dip into the Fed, the more likely the bounce. You know how the play is. Okay, when the Fed speak, if the market ramp into the Fed, sell the news, sell the rumors. Okay, or what am I? I mean, the old saying is, if the market dump into the Fed, you might want to buy for the bounce. If the market ramp higher into the Fed, you want to sell because after he opened his mouth and said something stupid, it crashed. Okay, so do the opposite of whatever the market is doing in the morning into the afternoon. Okay, so that's the play. That has been the right play most of the time. Not all the time, most of the time. All right, I think I said enough in the last 30 minutes, right? Like I said, it's nothing new that I can add that would change anything compared to what I already said Saturday. Be careful. GDX breaking support here. Look, gap down. Okay. All the people. See, this is what bothers me so much about people like Peter Schiff or the gold bug that scream and yell about how the world is ending. You gotta buy gold. Inflation run away. Well, guess what? Guess what? Gold is literally back to where it was a year ago. A year ago. Look, GDX is back to where it was a year ago. How about gold? Gold itself, pretty much the same, okay? There was a brief spike with Ukraine, and then guess what? It's literally back to where it was almost a year ago. Okay, so I just don't understand the nonsense that, no, gold is it's no different than crypto. All the people that keep talking about inflation and crypto, shut up. Shut up. You've been wrong for years. Years. It's ridiculous. It's just like no one called them out on it. Okay, all the crypto boys are still talking about. I like Anthony Pompliano. Okay, big fan of Anthony. I enjoy his podcast daily. But goodness gracious, how wrong can you be? How wrong can you be? It's embarrassing to be so wrong about inflation and this stuff. JetBlue rejected the deal. Unfortunately, it's in a quagmire. Disappointment for sure. I'm not gonna sugarcoat the situation with JetBlue. But let's see what other airlines doing. Delta down. UAL down. Okay, so yeah, I mean, what more can we do, right? Save down big. Yeah, yeah. Like I said, I don't get it. I don't get it. How about Twitter? Twitter is holding on, but like I said last week, if you have Twitter, why not sell at 50? Why not get out before? Okay, I can understand not getting out here, but when you get back to 50, 51, why are you still holding? What is the point? What is the point? Amazon, oh, is here. Amazon 2401. Wowza. All right. Let me text the big guy to see what, well, he had the order, so it must be in. I did not put my order in, okay? I did not put my order in. We talked about 2402. I talked about 2402 last week, but I did not put an order in. My brother just texted me. He said, 2400, OMG, emoji, shocking face. Oh my God, 2398. All right, time for me to focus on trading. Later, people, be careful. Be careful.